Hi, how's everybody doing? This is Silver Fox Forex back with another training tip video. Today's video is called Naked Charts. I removed all the indicators off minus the meter and the moving averages to show you guys what you might be looking for when you're trading and how most traders use indicators to help them be a better trader. There's nothing wrong with doing that. So I have a naked chart here pretty much outside of my session boxes and the moving averages and things like that in the meter. This here is a 50 moving average. So I'll just hover over it so you can see that. Simple moving average, 50. This right here is a 20 color changing MA. I use these two to gauge my trades when I want to take the trades along with other indicators. I was taught by my mentor Forex Nelson that you pull the trigger as close to the goal line as possible. And when you're using two moving averages, you have to make sure, so this is your 50 moving average, gives you a trend, plot the trend course of the day, and this is your 20 moving average, it's a little bit faster moving average. So what you're looking for is for this line to be above this 50 moving average. And it's blue, it changes color, and it goes up. This is what you're looking for as far as trade setup. So when you're getting ready to take a trade, you're starting to see that support right there. It's not going below that. You can draw a line across whatever it is you want to do. But when you get that hesitation and it's not going any further, you can see here, okay, I'm going from red to blue. But what you're looking for is for this candle to close above the 50 moving average. When it closes above the 50 moving average, you can kind of wait a little bit here to the next candle, and you're going to get in right at the bottom of this candle so that your stop is small. And you're going to do that once this candle closes and this candle starts to form. You're going to get in there, your stop, look at that, 2 pips, because I'm on the US CAD chart. But look, it doesn't give a lot of pips, but just an example, depending on your lot size, what you're trading. And it did a straight trend all the way up of 29 pips. It doesn't give a lot of pips, but those are the things that you're looking for, is when to get in your trade, and so your stop can be, you have a good stop. So you're not risking too much. Your risk management is very, very important. Let me see here. You have to follow these rules. Those are the things you're looking for. Now, as you can see, the line is red and we're below the 50 moving average. So the trend is starting to go down, and you see where they crossed that back here. Now, some people can trade that. I know how to trade it. It's not my best thing to trade, but I can trade it to make money. It's not a problem. And then look at that. The trend just started going down. So this is a little bit choppy. You can trade it. You just have to know how to trade it. But what you're looking for is a clearer picture to somewhere over here in this area where you're getting a doji, the long wicks and things like that on the candles. And look, it goes from blue to red. We're below the 50 moving average. This is where you would get in a trade at and take it down. You will wait for a pullback if you choose to get back in and get a few more pips. But then you're just waiting for the pullback again and going down. So just with these indicators alone, you're looking for that support and resistance pretty much. And the trend. That's why I use all the other indicators to make sure things are lining up so that things are going the way I want to go, so I don't miss out on a trade or I'm stuck in a trade or things like that. Because realistically, nobody wants to be stuck in mess like this. Depending on what time frame you're in, it could be 15-minute candles, 30-minute candles. You'll be sitting here forever, not making any money, probably being in a negative. You're looking for those clear trades, and this is, I move the indicator so you can see. I move the indicator so you can see what I look at. This right here would have been a reversal. I know that as soon as this candle right here closes above this 50 moving average, it's going to go up. My trend line is starting to go up. This line went from red to blue, is going up. So once this closes, I'm going to get in about right here and stick in a trade, probably right here, and get out. Wait for a pullback, 3 or more candles, red, get back in, write it back up. And then it's pretty much done for a minute because this is all sideways mumbo jumbo and you'll be stuck here. So you're looking for those good trades, those clear trades, but that's how you know this is below the 50 simple moving average. Look at this, it's going down. You can tell the difference of when it's going up and when it's in the uptrend. You want this line to be above the 50 moving average. So just from these two indicators alone, just using these moving averages, a lot of traders can do this without anything else and make money. They know that when it's above, it's going to go up. They know that when it's below, it's going to come down. So you just have to be careful of that and make sure you're entering your trades right. Some aggressive traders will get in here because they know it's getting ready to come down. More conservative traders will wait until they know that it's crossing or it's getting ready to go below and get in here. Some are good enough to take this trade because it's not a super clear picture. But most know, hey, this is closing above. Let me get in on this. It's starting to go up. It's going to go up. It's going up, so they can gauge those things and they know what to do. So just from the moving averages alone, you can gauge a trade and know which way it's supposed to go. So I hope this simplifies some things for some people who just want to use moving averages and price action. This is simple. You're just waiting for the pullback to the goal line, making sure that their 20 moving average is below for a sale, for it to go down. It's going to do some pullbacks. If you can hang in for all that, perfect. If you can't, get your money, get in and get out. And it will show itself multiple times before it crosses back here. Look at this. Up, pull back, up, pull back, up, pull back. So moving averages help a lot. So it just depends. I don't trade this pair a whole lot, so that's why I can't go back that far. But just to give you guys, a good idea of how it's trading and what it's doing. So if you want to just use the simple movement averages, and that will work out just fine. Get with a good mentor. Make sure that they're teaching you the right stuff. If this is what you want to learn, you want to look at a bunch of indicators. As always, this is Silver Fox Forex. Take care and happy trading.